You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun of the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take on your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender. Welcome back, Todd Halterman. How are you, buddy?
Man, it's so great to see you guys. Thanks for having me today.
Glad to have you with us. And let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And of course, we celebrate every day on Ron Siegel Radio. Some days we have to celebrate just a little bit more. Some days we take it a little easy. Today, let's see, Grateful Patient Day. I don't know about that one. Let's see. Oops, I think my camera just went a little wacko here. So we got maybe it's because I forgot to set the do not disturb on here. Grateful Patient Day. Neither snow nor rain day. If you're in Southern California, I think we're looking for a little bit of snow. The rain might be a little tough because it usually brings in humidity, so we don't like that one. Beer Lovers Day. Okay, I know there's a lot of folks that are beer lovers. I don't happen to be one of them. I'll just stick with the vodka, please. But I know there's a lot of beer lovers out there. Our friends over here at Brewery X, they're making some great beers, growing like a weed over there too. Man, I do like, well, I don't know if we've got the right slide here, Josh. Today's National Salami Day. Did we do Hebrew Nationals at least? Maybe. I don't know. I can't really tell. But Hebrew National, that would be my favorite. Just cut a chunk off of the log, put some deli mustard on it. Oh, well, I better move right along today and see what's going on in the markets. Do I want to see what's going on in the markets? Well, we got a little bit of a rebound today. The Dow Jones Industrial Average up 200 points. The S&P 500 is up 32. The NASDAQ is up 113. Oil is down $3.77 a barrel. That's some good news. Maybe we'll eventually get down to where the numbers were, where we should be, where we want to be. But down $3.77 a barrel. What does that mean for you and me? Well, on the national level, gasoline prices are not where they were a year ago at $3.18.6. They're $3.76.4. So still not exactly where we want to be. Right here in California, we're at $5.28. Todd, you in Idaho or Washington this week? I don't know. Where you be?
I'm in Idaho.
Idaho, $4.50 a gallon in Idaho. You beat Josh. He's down at $4.83. Jody's at $3.99 for Jody. $3.29 is what Lori's at. Going around the horn with our team right here. So watching out for those gas prices. Is it because oil is? Let's wonder what's going on right here. And I think we have a good handle on what is going on. Why would I say we have a good handle on what's going on? Well, we're looking at the oil prices are now down to oil is down to $83 a barrel. Okay, and we've already told you when we put that into our calculator at $83.13 a barrel, Where should our gasoline prices be? That pretty much equates to $3.71 a gallon on the national level. You have to add more for California because we like taxes and we like fees. But you see that Saudi Arabia and the Middle East, they're cutting their production. We got news yesterday that the U.S. federal government is only done like 100-some thousand acres of leases for oil production in the U.S. Normally, even under President Obama, it was over 1 million at this stage of his presidency. So we're cutting the amount of production. That's the demand, the supply side. Now, why would the price of oil keep dropping if the supply is dropping? Well, that kind of tells us that for one reason or another, people are not driving as much. It's only a solution, right? I mean, if they were driving as much, gas prices are down and supply is down, that means that prices would be going up. But with prices going down and supply going down, that means demand has to be going down. Just throw that out there for you. When you hear that what the people are surmising is the reason, well, we don't have to surmise too much. We just have to look and see. And I know that there are some places that tell us that, supply and demand doesn't work, or it's not going to work in this situation this time. I've heard some folks talking about the idea that real estate prices are going to start dropping. Now, I know they went down a little bit last month, but I've heard some people say that real estate prices are going to drop. No, they're not, because the supply is not increasing and the demand is increasing. As long as we have demand increasing, even though interest rates are higher, right? That's a given. Interest rates are higher. But when there's no supply of property, well, it doesn't matter that what's going on with the demand because there is no supply. I shared with you last week that we were so far down 500-some thousand single-family residences nationwide is all that was on the market. Now we're seeing that because of where the rental prices are going, some of the builders are saying, something, I don't think that I'm going to sell this new house that I just built. I'm going to put it on the rental market. I'm going to save them and hold them to rent them. That means even less supply coming to market. And I just read yesterday, maybe even early this morning, that baby boomers are giving us a huge number of new properties every single month. So there's more supply coming there, but it's still not enough for the demand, right? How do the baby boomers give us more properties? Well, they're downsizing and they're expiring. So when those two things happen, we start seeing more property available. Are people going to sell those properties, or are they going to hold on to them to rent? Right now, we're starting to see that maybe they're not going to do that. I'm just throwing that out there for you. I don't know what's going on here, but we're going to keep on watching all of these different numbers. My mic is popping. Okay, so maybe I got popcorn in here or something. I'm going to have to, Josh, you'll have to tell me what to do during the break. But a lot going on right now. Watch what's going on instead of listening to what some of the fake news media is telling you. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, expert forecasts on mortgage rates. We got the sneak peek on what's happening or what's going to happen when the Federal Reserve meets on September 21st. We've been getting these sneak peeks, so I know exactly what they're going to do then. I'm going to tell you about that. On the Town segment, brought to you by our friends at Visit Anaheim. We've got that for you today. Talking taxes with Todd Halterman. So there's two different issues going on with taxes right now. One issue that's going on with taxes is it is about tax planning season. Now, I know that if you filed for a extension, those extensions for the individuals are October 15th. I think that's the date. But you got to talk to your tax people, because right now we want to be looking and seeing what can we do? How can we plan for our 2023 taxes? Now is when you have to talk to your professionals to get the plans in place. If you're not happy with your plan, maybe you need to talk to our friend Todd Halterman. You're listening to Ron Siegel Radio, discussing real estate, current events, and the financial markets. You can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio, and if you miss any part of our broadcast. Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's take a look and see what the markets are doing. S&P 500 now up 31 points. The 10-year Treasury, we've been watching that one for you, 3.28, down 6 basis points. The mortgage-backed securities, they've been ugly since the Powell plunge about a week and a half ago. Down today, they're up 34 basis points, so that's some good news. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Conforming loans yesterday locked at 5.97, up 10 basis points. That is a bit painful. Ow! The 30-year jumbo, 5.532. That one was down. That's interesting. 30-year FHA locked at 5.765. USDA for the rural areas, 5.742, and the best loan on the market. You got to earn it. You don't get to just apply. That would be the 30-year VA loan, 5.586. 5.586. Why is this all happening? Well, that little birdie came back out again and spoke. The little birdie, Tim Timmerose, I think is his name, from the Wall Street Journal. So we've always, Todd, you'll remember this one. During the Greenspan years, we had the briefcase watch. So we used to always watch Alan Greenspan's briefcase. The thicker it was, that meant that there was going to be a rate increase in the Fed funds rate. If it wasn't as thick, there was not going to be the increase. Well, right now, the Federal Reserve seems to leak information to Nick Timmerose, who writes for the New York Post. It wasn't the Wall Street Journal, New York Post. And he wrote that the Federal Reserve is going to take a 75 basis point hike on September 21st. Every time this gentleman gives us a forecast, it's accurate. And when asked if this is your opinion or somebody else's, he hedges the question. So 75 basis points will be the number on September 21st. It's going to bring the Fed funds rate to between 3 and 3.25%. Following that is the November 2nd meeting. We're going to likely get another 75 basis points, put the Fed funds rate close to 4%. That means your home equity lines of credit, your second mortgages, probably right in the range of 6 to 7%, maybe a little higher than that, depending upon your creditworthiness. If you have an issue with credit, creditsanitizer.com is your solution, creditsanitizer.com. So we're going to be watching that. We've also got the Home Select program, which will allow you to maybe use a type of a first position HELOC, so to speak. and you're paying the principal first, you're paying the interest later, pay the principal first, you can take a 30-year mortgage and pay it off in about 11 years, even though you're paying a higher interest rate on an adjustable basis. CoreLogic released their home price index report showing that home prices declined by 0.3% in July and rose 15.8% year over year, which is a decline all the way from 18.3 to 15.8. The year over year number is still significant, but we likely see some changes from month to month. CoreLogic forecasts that prices will appreciate 0.3% in August and 3.8% in the year going forward. Now let's think about that 3.8%. And every area is different. Southern California might be a little bit higher. Let's round that to 4% because the numbers are easier. If you have a $400,000 home, which I know is hard to find here in Southern California, you put 10% down. That means your gain would be 16%, a 40% return on your investment due to the leverage. Think about that. Where else are you going to get a 40% return on investment and a roof over your head, both all at the same time? Just throw that out there for you. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So let's talk about this with our friend Todd Halterman, standing right there in the, I guess I'd say the bullpen, but we were in Anaheim here, or Orange, where we're broadcasting, and I don't know that we want to go to the bullpen. Todd does a lot better job than, well, our friends over at the Angels might not be happy with me. So good morning, Todd. How are you doing?
Good morning. I am fantastic. September looks beautiful right now, and it's a great time to be talking to investors and the community about how to be smarter financially.
Okay, so beautiful from an investment standpoint, or as long as you know what you're doing. Yeah, I looked outside yesterday, and boy, it's been pretty miserable here in Southern California from a weather standpoint.
Yeah. Well, there's opportunity everywhere, Ron. It might not be where you're looking, but I see a lot of different places.
And something you could find, you could find the opportunity. See here, the power cell, I think, is the opportunity, because we don't want gas in California. We don't have electricity in California. The windmills don't seem to be blowing in California. So maybe it's a power cell. I don't know how they're gonna fill up the power cells, but I think we're gonna need power cells. So investing in power cells, maybe that's our answer, Todd.
Well, it worked for Pac-Man.
There you go. And I should throw that out there just before we get started. Todd does not give us specific financial advice. We're educating you. If you'd want specific financial advice, Todd is happy to do that. That's how he supports his family. Make an appointment with him, give him a call, and talk about it. But Todd, during the opening segment, I mentioned that, September, October, November is when you really have to do your tax planning. Do you subscribe to that same concept?
You bet. In fact, yesterday I was doing a return with a client just in time, doing some scenarios on figuring out how to bracket surf and to get some of their IRA monies converted to Roth, because their income's down this year. So this is a great time for us to plan on how to disinherit the IRS.
So explain a little bit to me about bracket surfing. I mean, I know I'm not too far from Huntington Beach. I understand a little bit about surfing, but bracket surfing.
Well, you bet, Ron. People married filing jointly, once they hit a certain level of adjusted gross income, their brackets jump. And I'll give you an example. The first big jump is from the 12% tax bracket in the low $80,000 range, jumps up to 22%, which is, frankly, as you know, over a 40% increase in net taxation to a consumer. So then it goes from 22 to 24, and then 24 to 28, which doesn't sound like a lot, but 22 to 24 is almost 10 more percent, and 24 to 28 is almost 20 more percent. So we do everything we can to help people either A, reduce their adjusted gross income so they have more room to surf, moving qualified assets into tax-free assets before they get bumped into the next bracket.
So the 12%, what 22%? Where does 22% start roughly? Just
let's say 85,000 to make it round numbers.
So is it 80,000 to 85,000? Is that the thing for 12 to 22?
Right in there is where the delta is. And that's adjusted gross. So if you have standard deduction, that just means that your income is going to be around 108,000 to 110,000 gross. And then if you don't itemize, your standard deduction will get you down to that 12% line.
So we want to stay at that 12% as long as we can.
If it's possible for you to do it, we really try hard. If it's not, then we start helping people talk about how to build family corporate structure.
Okay, before we get into the family corporate structure, I'm still trying to make sure I understand this corporate or this
bracket surfing.
The bracket surfing. So if I have room, if I say you've got my adjusted gross income to 72,000, hypothetically, we're not using exact numbers. Please don't say, well, Ron, it was $72,163. No, we're just using round numbers.
Yep.
So if I'm at 72, I really want to use that extra 8 for my benefit. Is that kind of what you're saying to?
Right. And in the case of yesterday, there was a choice the client had to have. The door A was sell some Apple stock, which he's got a lot of gains in, to harvest $10,000 of capital gain at 0% tax, or convert $10,000 of the IRA into Roth. So they had to decide whether to harvest capital gains at 0% or convert IRA money to Roth at basically less than 12%.
Interesting. Okay, so, and then that Roth, obviously, just by definition, that's going to grow. You put it in there after tax dollars, and it grows tax-free until you take it out at some point in the future.
You bet. And I'll give you an example of why that's important. If you had Amazon stock in your IRA this time last year, it's down 25%. Well, wouldn't this be a great time to move those shares into a Roth so when they do grow back, it's all tax-free? And that grow back should be within a fairly reasonable time frame, which means you'll eat that tax money up in a hurry, and the rest of the growth on Amazon the rest of your life will be tax-free.
That's an interesting concept. So I could just move shares from a qualified to a Roth without selling and then rebuying?
Yes, sir.
Wow. Okay. So saves a little extra work right there, and maybe some expenses as well. So again, these are all things that you have to have in my world. You got to have a financial planner that's helping you with these ideas. Most of us don't have time to study the tax tables like Todd just did off the top of his head, right? And that's because that's what he does all day. Well, except when he's fishing. But, right, so he understands these things. He's ready to talk to people on this and counsel you. And, you know, it's sometimes, and you think about that. Just the thought of going from 12% to 22%. So my math is a little slow. So that's about 10% is the difference right there. And if you're doing that on $10,000, that's $1,000 of savings right there just by having the right guidance, the right counsel. Now, what are you doing for yourself? Right? Do you know that? If you don't know that, you know, you need to have somebody that's showing that to you. Now, Todd, if you do, can you make those changes in March of next year for the April 15th tax filing?
Well, and the changes really happen before 12/31, unless there's some qualified plans they can contribute to are eligible. So that's why September, October, November is a real good time for people to just measure twice. So in November, December, we can cut once, and their meetings with their CPA go smoother with less anxiety and stress, and the accountant finds better ways to mitigate their taxation.
There's the whole idea is just to try and, unless you're one of those people that really enjoy paying taxes. I know there's some that are constantly pushing to pay more. I don't happen to be one of them. I'd rather talk to Todd and find a way of not paying more. If you're in that boat, give him a call, 800-306-1990. I'll put you in touch with Todd Halterman. You're listening to Ron Siegel Radio discussing your real estate, current events, and the financial markets. Expert forecasts on mortgage rates. We'll talk about it on the town segment being brought to you by Visit Anaheim. We'll chat about that one as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Expert forecasts on mortgage rates. If you've been thinking about buying a home, you may have been watching what's happened with mortgage rates over the past year, over the past few weeks, over the past couple months. It's true they've risen dramatically, but where will they go from here, especially as the market continues to slow? As you think about your homeownership goals and decide if now's the time to make your move, the best place to turn to for that information is the professionals. Here's a summary of the latest mortgage rate forecasts from housing market experts. Experts project mortgage rates will stabilize. While mortgage rates continue to fluctuate due to ongoing inflationary pressures and economic uncertainty, experts project they'll start to stabilize in the months ahead. According to the latest projections, mortgage rates are expected to hover in the low to mid 5% range initially, and then potentially dip into the high 4% range by later next year. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a chart of mortgage rate projections from Freddie Mac, Fannie Mae, MBA, the Mortgage Bankers Association, and the National Association of Realtors. And we average all of them. So when you put them all together, by the third quarter of 2023, they're projecting 4.8%. We'll see what happens there. But hey, you know something? We know that I think the last seven recessions, interest rates went down. Going to happen again? Don't know. We'll see, but history generally repeats itself. That could bring you some welcome relief. So far this year, mortgage rates have climbed over 2% due to the Federal Reserve's response to inflation, and that's made it more expensive to buy a home, and wondering if the rise in rates will continue to keep some prospective buyers on the sidelines. But now that experts say mortgage rates should stabilize, this gives you a bit more certainty about what they think the future holds, and that may help you feel more confident about your decision to buy a home. Now, again, if you're buying a home, that's great. We know those things are perfect. You're owning the home. Hopefully it's long-term. It's not going to be a short-term investment, but you don't have to hold the mortgage forever. If rates go down, take advantage of them. And again, I just shared this just recently, $500,000 loan. And it's not exact, but roughly $500,000 loan. The difference between a 650 FICO score and a 720 FICO score is about $236 a month. CreditSanitizer.com. CreditSanitizer.com can help get that score up. And just one of my favorite phrases, FICO, up yours. Whether you're looking to buy your first home, move up to a larger home, or even downsize, you need to know what's happening in the housing market so you can make the most informed decision possible. If you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you for an introduction? That's the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Continue our conversation with Todd Halterman this morning. We're chatting about, we've talked about minimizing taxes, and it seems like, early September, right after Labor Day, it seems like an odd time to be talking about taxes, but there's 87,000 new friends coming after you. So just remember that you want to have a plan to minimize taxes in a legal and I think just as much as a legal way, a defendable way, right? Because you can do everything right, but if you don't know how to defend that strategy, it may not be any good with all these new IRS agents coming after us. So Todd Halterman is with us, not giving us specific financial advice, but giving us food for thought, things to think about that we need to go and chat with our financial professionals about. If you don't, I send this out to our private clients all the time. Todd, you might like this one. So I send out to our private clients all the time that I want a survey. And our survey is rate your real estate professional on a scale of 1 to 10. You can't use a 7 because that's a cop-out. So rate your real estate professionals on a scale of 1 to 10. Rate your estate attorney on a scale of 1 to 10. Your CPA on a scale of 1 to 10. Your financial planner on a scale of 1 to 10. All of these different, your insurance people, your life insurance, and your property and casualty, scale of 1 to 10. Again, can't use a 7, that's the cop-out. If you don't have a 9 or a 10, let me know and I'll introduce you to Todd Halterman. Now, I can't say anything about a lot of things, but financial planning, he's a 10. Right? No one else other than Jessica might say that he's a 10, but financial planning, he's a 10. So if you don't have somebody there, call me at 800-306-1990. Todd, what other things are you talking right now to folks about? You know, we've got a stock market that's volatile. We've got political turmoil. I don't know that the man on the street is as tumultuous as the politicians are. But what are you talking to people about?
Well, you know, when I was growing up around hay farms and cattle, we had a saying that pigs get fat and hogs get slaughtered. And over the last 3 years, American consumers have gotten used to a market growing at 15 to 20% per year. And in the middle of a financial crisis, a global pandemic, and an international shutdown of manufacturing and trade, our market swelled 20% during a time when it shouldn't have. But our monetary policy in the last 4 years, our government has printed 40% of all the money they've ever printed in the history of America in the last 4 years, Ron. So we're talking a lot about people in America that they've lost sight of true planning. They've gotten greedy. Their expectations are way too high. And we're seeing a marketplace that's resting and correlating to this non-consumer friendly environment. So what we're talking about, Ron, is being real about your goals, having a strong financial plan on how to keep more. And the only way that our government is going to balance out their budget is to increase revenue through taxation and inflation. So Americans need to wake up a little bit and start talking about inflation protection, not stock market protection, because the original reason to invest in the market in the first place was to try to keep up with inflation and the supply and demand of commerce in America. Now, people are paying attention to real estate again, and that's wonderful. But I would remind Americans that real estate was the original stock market, and it is one of the safest assets over a long period of time to have capital in. So having balance in your life and not putting all your eggs in one stock market basket is really a lot of what I'm talking about.
So it's that diversification world.
It's more than diversification. It's not about asset allocation. It's about asset location, Ron. And it's about where are your assets located, not how are they just allocated. Because you can make money, but if you're not keeping it, what good is making it?
Wow, that's significant right there. I mean, if you're just going to make it to send it to the government.
Well, I have a lot of people that told me how much money they had in crypto a year ago, but where's it at? They didn't keep it. They like to talk about it, though.
Yeah, and that's the whole thing is the woulda, coulda, shoulda type thing.
That's why you have a plan, and that's why I spend more time helping people talk about planning their goals in their life and their objectives with their money and writing plans for those job descriptions than we do talk about stocks, bonds, and mutual funds.
That's an interesting concept. You know, back in the late 90s or the turn of the century, I was at Merrill Lynch. And back then, right before the dot-com burst or bubble, it basically was, well, people don't understand this today for the most part. Old people like you and me, Todd, we remember, You used to be able to go to the newspaper. That was a thing that was on thin paper, black ink got all over you. And you could throw a dart at the stock page on there. They don't even have that in there anymore. And you could find something that was going to go up until the bubble burst, just like you're talking about crypto, right? It went up to what, 70,000 on Bitcoin, and now it's what, 19,000 or some crazy thing like that. You know, you want to have stuff that you've got to be more protected on the downside or know when to get out, or you have things that are just, steady eddies that are just going to move at a steady pace.
Yeah, well, you need balance. And unfortunately, greed has taken over this economy and this market, because I see companies hitting financial targets or missing financial targets. They're still growing at 28% year over year, but they missed their target by 2% and their stock gets crushed 30%. That isn't rational. That company's profitable and there's market risk involved. But a lot of people are overreacting, kind of like when you learn how to drive. If you look over the hood of your car, you overcorrect. That's the effect of not having a plan.
So when you're looking at your plan, how do you plan when you've got so much geopolitical uncertainty right now?
Well, the uncertainty is there because the lack of confidence is there in the financial markets. And many Americans have been blindly trained and taught that they need to have their 401k and IRA money 100% in the market. So my biggest debate daily is how to help Americans be more diversified, similar to the Harvard and Yale endowment, if you will, on how they can own private businesses and private banking and private real estate and energy, but not necessarily do it just in the publicly traded marketplace. But it'd be nice to own a company that's value was based on real tax returns and real assets, wouldn't it?
Yeah, and not have something like, was it AMC last year that went up, or GameStop that went up 1,000,000% and crashed just as quick. And, we told people on Ron Siegel Radio that, I don't give financial advice either, but when something goes up that dramatic, it can go down just as quickly. And usually you're taking a escalator up and an elevator down. So you got to be really careful of those things. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. More with Todd Halterman when we come back. We're going to also talk to you about On the Town, brought to you by Visit Anaheim. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Every week at this time, our friends over at Visit Anaheim give us some events to do, things to do. And I love it because then I don't have to figure them out for myself. On the Town, brought to you by Visit Anaheim. Major event of the week, Fashion Fair. Center Street Promenade will be full of local vendors bringing you all things fashion at downtown Anaheim's Fashion Fair on September 18th from 12 to 4 p.m. Discover local clothing boutiques tending to every style. Gawk over extraordinary pieces from talented artisan jewelers. Try something out of your comfort zone with on-trend accessory brands and much more. Need some outfit inspiration? Swing by the stage area for an up-close and personal show featuring items from some of the wonderful vendors you'll find at the event. We also get a romantic event of the week. 21 Pilots. It's a concert. 21 Pilots is bringing the Icy Tour to Anaheim on Saturday, September 17th, 8 p.m. Treat your significant other to some live music and a night out at the Honda Center. Purchase tickets online on Honda Center's website. Got to love that one, the romantic event. And the family event of the week, second annual Mother Earth Market. The Anaheim Packing District and ECO now presents the second annual Mother Earth Market on September 17th from 9 a.m. to 4 p.m. located at Farmers Park. This mindfulness market will have free community meditation and yoga classes, composting workshops, a neighborhood cleanup, live music, vendors, clothing swaps, and more. Don't miss this fun and free event for the entire family. Looks like a bunch of fun there from our friends at Visit Anaheim. And hey, don't forget, tied in with Visit Anaheim is the Orange County Sports Commission. And if you missed the show yesterday, we talked a lot about the Sports Commission. They've got their Golden Ticket fundraiser. And this one sounds like one of the great fundraisers of all time to me. I mean, because it's got some cool stuff. $100 ticket. They're limiting it, I think they said, to 500 people. But the winner of the fundraiser, the drawing, is going to get 2 season tickets to the 2022-2023 Anaheim Ducks home season, 2 season tickets for the Angels baseball home games, 2 Disneyland resort tickets, and 2 season passes for, it's the Disneyland resort season pass and 2 Knott's Berry Farm season passes. That's a lot of stuff that you have the opportunity to win for a $100 raffle ticket for the fundraiser. Sweepstakes ends on September 16th, and the drawing is going to be held on September 23rd. You can go and get that at ocsportscommission.com, I believe it is, ocsportscommission.com. We're going to have to modify our graphic because we did a graphic, and I'm not seeing where the website is on here, but I think it's ocsportscommission.com. But we'll have it on our Facebook page, our website. If you're trying to find it and you miss it, just give us a call, 800-306-1990. On the Town, brought to you by our friends at Visit Anaheim. Continue our conversation. Todd Halterman is with us today, chatting about maybe saving some money, financial planning. No specific advice for you here. We're just giving you overall guidance, things that you need to be thinking about to talk to your financial planner about. If your financial planner is not a 9 or a 10, give me a call at 800-306-1990. I'll put you in touch with Todd so that he can get you the information that you need to make sound decisions. So, Todd, I like to talk. I mean, I know that you deal so heavily on the asset side of the balance sheet, but I know you spend a lot of time on the liability side of my personal balance sheet as well. Talk a little bit about what you're doing there.
Well, I found a long time ago that many of my peers do not spend time helping consumers or clients get out of debt. They really focus on accumulating wealth and trying to help people save their money. But you and I both know it's 5 times easier to create debt than it is to save. And it's a tragedy which caused a lot of people to not be able to retire when they want to or when they need to. And sometimes without a lot of hope that their life's going to be more than living paycheck to paycheck. So we've dedicated our firm to having certifications in getting people out of debt in 9 years or less without spending any more money than they spend right now. So we literally have an actuarial team that helps us formulate a plan for people with the money they spend right now and how to rework it on their budget, if you will, and how to use that cash in the right way to literally be out of debt in 9 years or less. And if they qualify, we guarantee it. There's certain things that they need to do or have to qualify, but certainly 7 out of 10 people we sit down with, we make a sincere dent in their goals and strategies. And it's not by saving more, it's actually putting more money into their family's pocket.
So I talk to a lot of financial people all the time, and kind of quite frankly, with us leading a lending team, and now with the having some sponsorships with the credit repair folks, we're constantly talking about. I throw it out to the financial people that, hey, you guys deal with the leftovers, right? I mean, because people are out there, they spend their money on their house payment, their car payment, their credit card payment, and every other payment that they can possibly qualify for. And whatever's left over, in most instances, is what they send to their financial planner to set aside for their retirement. And then they want to retire for 20 or 30 years. Well, what Todd's talking about here is increasing the leftovers. Right? What would happen if you didn't have a mortgage payment? Right here in Orange County, with a median home price over $1 million, mortgage payments are a significant number. And if that could go into your financial plan, can you take increases or contributions, Todd, that are monthly like that, or does it have to be something that's lump sum?
No, it's not lump sum at all. It's really just about how people have created their basket of goodies, if you will, and what does that basket look like? And then when their income comes in, how are they? And most people are doing the best they know how. Okay, nobody wants to say that I know I'm not doing the best I can with my money, but if they are trying, then maybe a lot of times they're just doing it the way they know how, not the way an actuary or somebody that's got a PhD in science and math would do it.
That's a big issue. I did a little test or a quiz, I guess, or raffle at a real estate meeting that I was facilitating, and I asked these realtors. I said, okay, you've got a 30-year fixed rate loan. How long does it take to pay half of a 30-year fixed rate loan? And the numbers come back. Most people say, well, 15 years. I mean, it's not too hard. Figure 30 years, half of that's 15 years. No, it's about 20 years, right? 20, 21, 20 and a half, I think was the exact number in that scenario that I laid out for them. Why is that? It's because the way the amortization tables work. And that's those math and those financial wizards that you're talking about, Todd, right? They're understanding that and working those tables to make it work for somebody.
Yeah, and where's the best application of your current dollars? Compounding that with time value of money calculations, and then identifying what's going to have the biggest impact over the next 3 to 5 years for the way they want to live. Nobody wants debt, but they take it on because they want their life to grow. So how about we help them catch up, and then they can retire or not work full time a whole lot earlier than they would if they just don't even make an effort.
So I threw that one out as far as the concept of how long does it take to pay off half that 30-year loan. Well, here's another one for you. If you get a tax refund, you got to go to Todd and he helps you deal with your taxes in a strategic way, or you get a bonus at work, you're working overtime. 4 payments on a 30-year mortgage. If you can make 4 payments, you got a bonus or a lump sum of money, is going to move you down 10 payments on the amortization table. Think about that. So that more money is going to your principal every single month. Now, is that a good idea? So the question there, Todd, do I really want to do that? If I've got a 3% or 3.5% mortgage that I took out last year or the year before, am I better off paying that off, or am I better off getting you that money and saying, Todd, isn't there something that you can do better than a 3% return?
Yeah, and that's part of the analysis to help people identify with who's their strongest employees and who's their weakest employees. And people don't think of their money as employees, but I do. And employees need job descriptions and need guidance and performance reviews. So my role with folks is to give them guidance on who are the best employees, what's the best way to make those employees work for you, or is it time to fire that employee and go with a different direction?
That's a whole new concept. Most people aren't even thinking about it that way. And thinking about the concept, especially right now with this inflation. I mean, you figure that when you've got inflation at 8.5% or whatever it is, and if you've got that 3% loan, 3.5% loan, You know something? Find those employees that are going to get you 9 or 10 or 20%. And Todd, last month you were talking about a bi-directional. We don't have a lot of time, but you were talking about a bi-directional investment that can kind of help you out in all different facets, right? I mean, are those things still available?
Oh, yeah. Well, savvy Wall Street investors, they make money on the down and the up. And a lot of late consumers don't understand how to do that without getting their head ripped off. So we have different programs where if the market's down 10%, our clients actually make 10%. And if the market is up 10%, they actually make 10%. So you don't have to just sit there and wait for it to come back. We issue proactive, risk mitigated programs to help Americans not sit there and watch their fortune go down and say there's nothing they can do about it. If you would like to make money when the market is potentially down or up, then you need to understand how to educate yourself about tools that can do just that.
And I'm going to suggest the best way to do it. And again, I don't get paid by Todd or any of that kind of stuff. My idea here is just to educate you, our listener, to say, you know something, you got to talk to somebody about these things because it might help you sleep at night. It's not a magic pill to make you go to sleep. It's not like going to, I don't know, one of those brand name PM drugs. That's not it. But if you're not stressed about your money, and finances are generally one of the biggest stresses out there. If you're not stressed about your money because you've got protection from some of the biggest asset managers in the world, maybe you want to make that phone call, 800-306-1990. Great information, Todd. I appreciate you coming on and sharing with us. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
To call him something